It's Sunday, the 19th of November 2017. I haven't done many updates in the last probably 6 to 8 weeks on the gold chart, and it's the related sort of markets. And the main reason for that, there's been not a lot happening in in the gold chart in particular. It's really tight little range here, but sort of in this 1300 and 1260 level. Obviously, we've held this breakout of this long-term downtrend has held pretty well. You can see we're still above that sort of 2017 up the trend line upwards. So that's looking encouraging. 1260, they've tried to attack that a number of times in the last 6 weeks. And you can see here that this is the gold futures chart. Normally I look at the spot chart, but the volume, you can get the volume on the futures chart, so it's a better indication there. And it's been a nice little uptick in volume here in the last few months. And in particular, I like that when the volume sort of picks up and it's trying to break lower, it holds those levels and consolidates. That's usually a pretty positive sign. The market, the gold market, and a lot of the individual stocks, the gold stocks, the performance is similar to late 2015 for mine, and that was a period that I followed very closely. A lot of those stocks were completely unloved. And it was I think I was watching my portfolio a little bit too much at that time, and it was going down a lot. Gold was back down to the 10-year lows sort of thing around 1050 on the spot market. I think was the ultimate low. It's a little bit different on the futures chart, but this consolidation period here is reminding me of what we're seeing now. And most of the bottoms in gold tend to be these short, sharp bottoms of a week or two. But for this sort of 5 or 6 week consolidation bottom, that's very positive, and you don't tend to see that much. And to me, that's an indication that's ready to move higher. Obviously, short term, probably 1310 sort of region, and that would probably confirm a little bit of a double bottom there if it broke out above this sort of level here, and then you could maybe see it repeat the range here up towards sort of 1350. And that would be back toward the yearly high. So that's looking pretty positive. US dollar index is also an interesting chart at the moment. I've been talking about this one for all year. I've been pretty bearish on this chart. And last video I talked about this 94 level being a key line in the sand. Obviously it broke out above that there on nice volume. Looked like a confirmation of this sort of head and shoulders bottom, but it's really struggled to break a lot higher. And just in the last week, it broke down back below 94. So maybe that's kind of a retest or a sort of a false breakdown there. But it's sort of unclear at the moment. It's had a bit of a little long reversal tail on that day there, so maybe it'll start to move upward again. But it's definitely it's a weak chart. It's declined by about 10 or 11 points there all year, and it's only retraced 2 or 3 of those back up to sort of this first resistance level at 94, and it does not look positive. The analog I've had for that was this period in 2006. I'll just get it over on the chart there, and that's after this uptrend here, which is the reason I've chosen this period. It was the last interest rate hiking cycle in the US. And after that sort of after that trend line broke, we had a nice little breakdown, and then we had about a 6 month period of consolidation, and that's what I've thought we probably would see here. We're going to have that sort of consolidation zone, and so far it's been about almost 4 months there where it's consolidated, but not in a very positive fashion there. It looks like it's going to, it's only a very low consolidation, as I said, at the bottom part of that down move. So my feeling has been that with a lot of, I feel like the interest rate hiking cycle after the December move could be over. Doesn't seem like there's a lot of people who know what to expect after December. The US economy not showing huge signs of strength. I know there's a lot of people who say it is. I think people get confused between stock market strength and economic strength, but that's kind of another discussion altogether. But my feeling is that this is ready to break lower. So what that means for the Australian dollar US dollar combination is kind of unclear. It's been a very poor move in the last 6 weeks for the Australian dollar. and potentially it's reaching. You can see here I've sort of drawn in these repeating ranges of down moves in the last couple of years. Potentially it's kind of reached a bit of a point where it might start to consolidate here around this sort of 75 level. It did break down from a 2 or 3 week consolidation here, so maybe it's got another few days of lower prices, but Australian dollar does not look strong at this point, and it's kind of been a good, even with the US dollar coming off in the last 5 days or so, the US dollar index anyway, the Australian dollar has also come off at the same time. So you're sort of seeing that decoupling of the Australian dollar and the gold price a little bit, the US dollar gold price, and that's positive, obviously, for Australian dollar gold, which has been my sort of go-to play through the Australian gold producers. You can see in this period in July, I was talking about how even though it had broken this sort of trend line here, I was buying up companies like Northern Star and Evolution and Regis, mainly because I felt like all the fundamental factors for the Australian dollar gold price were still in place. So it was an excellent buying opportunity, and that's played out well. Up sort of back up above 1700 now. Really good day on Friday. Biggest move we've seen in probably the last 6 months. Maybe won that one there in August, but it's broken out above this sort of 1650 level, which I've talked about as kind of a line in the sand. And I think that the reason it's sort of a line in the sand is I feel like when the Australian dollar gold price breaks above there, you tend to see a bit of money start to move into the junior end of the market in particular, and that's what I'm looking for now. I've actually gone out of a lot of those larger cap positions because I felt like maybe there was, if this market broke down, I didn't really want to hold a lot of those stocks in my super fund, and I thought that maybe the risk reward wasn't there, but the junior end of the market I think was still, some of those companies are still good companies and churning out good profits. So I was sort of rotating into those producers in the last few weeks, and it's looking a bit. If you look at that, it looks a little bit overbought, but I'm still thinking the fundamentals sort of drive this chart more. This is kind of a derivative chart. It's Australian dollar and US dollar. It's not a directly traded market as such. So it's the chart itself doesn't drive prices. I don't think anyone's watching the Australian dollar chart and kind of thinking, RSI above 70, maybe it's a sell here. So that's looking very positive. And some of the other gold related charts, the GDX, done nothing all year. Low, not much you can say here. Really consolidated around this sort of 20 to 23 level for a month. 22 to 23, so extremely low volatility for gold mining stocks, the larger caps anyway. Complete drop off in volume. So you can see there the volume there is the lowest in the last sort of 3 years almost, last 2 years anyway. And getting back to this period, the same period in late 2015, where there was a complete lack of interest in gold miners. And the GDXJ chart, the junior gold miners, is even more reflective of that. And I've even drawn it in here. You can see this period here. I think there's a good argument to be made that it's reflecting something similar now. And the volume there back goes all the way. If you trace, the average volume has been higher for the whole time since February of 2016. So since this period here, we haven't seen as little interest and flow in some of those gold mining stocks. And in the junior gold miners, it was particularly since that recalibration or the rebalancing of the GDXJ in June, and which was sort of front run in April when it was announced how they were going to be changing the methodology, and that's really set up these stocks to be just. And that was one of the reasons I wanted to move into some of the bigger names when that Australian dollar gold price was lower, because I didn't think the money just hasn't been flowing to the junior end all year. But some of the bigger companies are still, the bigger Australian companies like Northern Star, St. Barbara, Regis and Evolution are still getting that good money flow coming into them. It's pushing the stock prices higher. But I think the juniors are starting to, will start to run here. There's good value in a lot of them. Something like Ramelius, Silver Lake, I think these are well-positioned companies. Resolute's another one, even though they're not really an Australian-based gold miner. I think they will run at some point, particularly if they're probably more tied to the US dollar gold price, the sentiment in that one rather than the Australian dollar gold price. So all in all, I think the gold market's probably looking the strongest it has for probably for the last 3 months, and that increasing volume trend is the thing I'm keeping an eye on in this futures chart, which I think looks positive for a move higher, and and hopefully the stocks start to follow as well, because they haven't for the last for most of this year. They've been a pretty poor market to be in.